Hello everyone and welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec. On Thursday the 14th of November there is a definite risk aversion that's filtered through into markets in recent days really. This coming as there is increasing caution surrounding this US-China negotiations towards phase one. China suggesting, well, the reports in this press suggesting there's a snag in the negotiations and that China are getting to be a little bit worried about the one-sided nature of this agreement to make these agricultural purchases. And subsequently there's a bit of a risk aversion that's coming through. We've seen that the safe haven flows are coming back in. Let's show you Treasury yields, which have fallen away in the last couple of days. 197. The last week's high. We're back more than 13 basis points from that high now, as 10-year Treasury yields have fallen away, and that again sort of is reflective of this worry that markets are starting to have. Are you starting to see volatility rising? That would tend to come on the VIX, which would tend to be met with sort of turning lower on equity markets. I've seen S&P 500 holding up pretty well at the moment. But are we starting to see reversal patterns coming through? I've got my chart today, which is the DAX. European equities are lower. And you're starting to see gold, which has picked back up again. So really interesting moves that we are seeing in these markets at the moment. The yen is performing much better, sort of coming back. And again, technical implications I'll go through in a bit on that. So really some safe haven vibes going through markets at the moment. Now, in terms of data that we've seen overnight, we saw Chinese data missing across the board. Look at that, 4.7% on industrial production, 7.2% on retail sales. Those levels continue to fall away. However, there's a little bit of a positive in the fact that the German GDP numbers came out better than expected. Germany actually avoided going into recession in Q3. Mild positive there, but a downward revision of Q2. Sort of tempers some of the positivity surrounding that announcement that they're not in recession. With regards to looking forward this morning, we've got retail sales to the UK out in a short while, expected to improve to 3.4% on the ex-fuel retail sales, so not too bad there. And then into the afternoon, we've got the US PPI at 1:30, but inflation is certainly falling away, or inflationary data is falling away. The headline PPI down 0.9%, core PPI down at 1.5%. Jobless claims around normal levels, sort of 210 to 220 seems to be where we've seen jobless claims in recent weeks, as you can see here. Okay, so that takes me on to, let's have a quick suggestion that Fed speakers could have an issue today, could have an impact. We've got 4 of them, tending to be on the dovish side, interestingly. Clarida, Evans, Williams are all sort of mild doves on the committee, all voters, but also Bullard, who is or previously the dissenting dove, so they could have an impact on the dollar today, as could obviously Jerome Powell. He's got the second day of his congressional testimonies, so watch out for that. Okay, so onto my chart of the day. I said that was going to be the DAX, and what we saw yesterday was an intraday breach of this old uptrend. Didn't quite sort of hold that downside move below the initial support at 13,144 into the close. It rallied into the close, but again falling away today. And look at these momentum indicators. Markets are starting to show more tentative signs of profit taking coming back in. MACD lines crossing on the brink of crossing lower. RSI back under 70. And again, if the market sort of closes underneath that 13,144 mark, that really would complete a little bit of a top pattern. You can see here on the hourly chart, I suppose you could take the support at 110. But that would sort of complete a little top pattern, wouldn't it? And look at these momentum on the hourly, beginning to sort of turn arguably back towards a more corrective outlook. So those MACD lines, if they go decisively below neutral, that would be a suggestion that that's coming in. So there are signs that these equity markets are sort of threatening a little topping phase. And you could see the DAX back at the sort of 13,000 mark quite easily. That was the latest breakout. As the move that we could see driven through the faltering momentum starts to kick in. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.